If you've been watching Dave Ramsey for any period of time, you've probably heard him talk about his investment portfolio. He recommends that you invest in growth, growth and income, aggressive growth, and international. You may have also noticed that he never publicly states exactly what funds he invests in. In this video, I'll be breaking down what funds Dave Ramsey most likely invests in and the reason that he doesn't say it on the air. So before we get into the portfolio, let's review Dave Ramsey's investment philosophy. Let's start by breaking down the 4 types of mutual funds that Dave recommends, as I understand it. So there's growth, and these would be mutual funds that invest in companies that want to grow their earnings faster than average. The growth and income, I think, most closely resembles a fund that tries to achieve growth but skews slightly towards stocks that pay dividends. Aggressive growth, and man, this is funny, there's a lot of growth going on here. This is usually attributed towards small cap growth funds. And the last one is international, which is non-US based companies. So that's his portfolio. He divides his funds equally between the 4 different types. So before we move on, we have to go over that Dave believes that we need to hire someone to help with investing. Just like you'd hire a heating and air guy to fix your AC, you should probably hire someone to help with investing. And there's 2 types of help that you can normally get. The first is you pay someone, whether it's out of pocket or an hourly fee or a percentage of the assets they manage, also known as AUM. And this is typically categorized as fiduciary, where they have to put their own best interest before your own. The second type is the one that gets paid by the mutual funds. So you'll essentially meet a salesman and they will sell you some mutual funds, and the mutual fund company that made these will pay your advisor when they place you into a fund. So this is known as a commission broker. So they put you in funds that are known as suitable for you. They put you in funds that have a sales charge. So for every $100 they invest, they'll take $5. So with the remaining money, they'll go and invest the rest. So that 5% that you pay up front to your salesperson, it splits between the mutual fund company and the salesperson. And your commission broker will also get paid a part of the expense ratio of the fund. The reason that I mention this is because Dave recommends going with a commission broker. My most likely explanation as why he recommends this and why he doesn't say what funds he has on the air is because he has the SmartVestor network. So what this is advisors and brokers can be paid a fee to be added to the SmartVestor network. So when you need investment help and you go and sign up with this SmartVestor website that Dave Ramsey has made, they will provide you with a small list of advisors to choose from and interview. I believe Dave wants to maintain the value of this SmartVestor network. If he said the funds that he invests in on the air, what reason would you have to go with the SmartVestor? With less advisors being willing to put on the list, that means less profit to line Dave's pockets. So now that we know why Dave doesn't mention the funds on the air, let's dive into what he probably invests in. And the key word there is probably, because we can only determine funds based on the information that he has provided, which is 1, that the funds have a rate of return of 12%, and 2, that they have been doing so for a long period of time. So I take that as meaning at least over 10 years. So let's go ahead and take a look at some of the funds. The first one here that I selected is ticker symbol ANCFX. This is a growth and income fund by American Funds, and actually all 4 of these funds will be from American Funds. The second is the Growth Fund of America. So this is the flagship fund actually for American Funds, and it's categorized as the Growth Fund. So this would be the fund that Dave calls growth. And if you can see here, the expense ratio is 0.61. And this is typical of what you find in an S&P 500 with these market caps with a few minor changes. So if we scroll down, we can see the last 10 years of performance. So it's been 18%, but remember again, with these commission broker funds that Dave recommends, you have to pay this 5.75 sales charge, but actually with that included, the performance has still been 17.45% over the last 10 years for this flagship growth fund. And this is only the last 10 years of data shown here. I will show you more later. So growth and income, I believe I went over that one already. So we have here ticker symbol SMCWX. This is the small cap growth. So this is what he'd say, or say the aggressive growth is. So we see here a bit higher of expense ratio of 1.06 and a lot smaller companies. And if we look at the 10-year, again, with the sales charge included, we have a 14.77% rate of return. And finally, we have the Euro-Pacific Growth Fund, ticker symbol AEPGX. This would be the international fund, so non-US based companies. Expense ratio of 0.82. And if we scroll down the rate of return, this one's slightly lower for international, which is pretty common across all international funds. It tends to underperform. So we're at a 9.59 rate of return. So this is only showing the last 10 years. So let's go ahead and take a look at PortfolioVisualizer and see what the performance is like here. So I've plugged in these ticker symbols that I just showed you, and I'm doing the Dave Ramsey allocation of 25% each divided equally between the 4 funds, and I'm putting it up just for fun against the S&P 500. And if we look at the parameters we're setting, so it's an initial investment of $1,000, and we're contributing a fixed amount, $500 a month. So let's scroll down and take a look at the performance. And so you can see 1.1 million and 1.15 million. So pretty staggering amounts for such little money. And this is data starting back from 1993. And as you can see by the compound annual growth rate here, 28.92% versus 28.83. I mean, less than 10 basis points difference between the two. So really, Dave Ramsey's portfolio is doing just fine. But something to keep in mind with this portfolio visualizer is it doesn't include the initial charges that you have to pay. So those commission sales that you have to pay up front, that 5% we talked about. So that's not included here. So I think it will drag down the performance of this Dave Ramsey portfolio a little bit, but still it's doing quite well. And I thought just for fun that we could look at this American Growth Fund, because I think this is really where Dave gets that 12% that he throws around. So if we just plug in the Growth Fund of America by itself, this fund has been around for a long time. So if we look at the data, this is starting from 1984, and the compound annual growth rate is 13.38%. So I think these are the funds that Dave is talking about when he says that he can outperform the S&P, and you got to go with mutual funds. So if we go ahead and take a look, 48% max drawdown, worst year of 39%. But yeah, and as far as parameters, this is $1,000 initial. Let's go ahead and just throw $100 monthly contribution, because really, I mean, who does like a lump sum investment and waits 30 years? You know, more than likely you're going to be contributing monthly. So we have here contribution. So $100, we're doing 1,000, 100 monthly contribution. Let's take a look how it did. Oh, I must have done something wrong. Contribution frequency. Oh yeah, here we go. I guess I did it fine. I don't know what happened there. 21%, yeah, so really great performance on these American growth funds. So as we can see, the Dave Ramsey portfolio has performed similarly to the S&P 500, and this is in thanks great to the American funds being around for such a long period of time and having a really good track record. I think that overall, the Dave Ramsey portfolio did really well. I don't think it dramatically outperformed a low-cost index fund like Dave Ramsey alludes to. We could sit here all day and compare portfolios, like the Dave Ramsey portfolio to everything else, and find a better one. But I think the key takeaway here is that if you want help with someone to help you with investing, then this Dave Ramsey approach could still be a great option for you. Well, there you go. That was the Dave Ramsey portfolio and why I think he never mentions the fund publicly on air. I hope you got something from the video. Let me know in the comments down below. Do you use an investment advisor or do you prefer investing on your own? Thanks for watching.